Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about the Russian ruble and the Russian economy. A commonly accepted principle in economics is that the strength of a country's currency is directly related to the strength of its economy. If a value of a country's currency is increasing, it generally means that there's demand for that currency and therefore indicates that the economy is doing well. However, when a currency is performing badly, it often indicates that there are underlying problems in that country's economy. Immediately following Russia's invasion of Ukraine, there was a dramatic fall in the value of the Russian ruble. However, there was an immediate bounce back, and a lot of commentators at that time said that this proved the underlying strength of the Russian economy. However, over the course of the last 12 months, we have seen a dramatic decline in the value of the Russian ruble. So in today's video, I want to look at what's been happening to the exchange rate between the Russian ruble, the US dollar, and the euro, which historically represented the strongest trading links for Russia. I then want to go on to look at what's happened between the Russian ruble, the Chinese yuan, and the Indian rupee, because China and India have now become two of the largest trading partners for Russia. We'll then go on to look at what's happening with Russian trade, because Russian exports are intrinsically linked to the value of the ruble. We'll then go on to look at what's happened to Russian inflation, and then finally today I'll wrap up with my summary as to what I think is happening with the value of the ruble and what the implications of this are for the Russian economy. This chart shows the movement between the US dollar and the Russian ruble over the course of the last 12 months. And as we've discussed before on the channel, when we're comparing two currencies, we generally look at the strongest currency first, the one that has the highest value. So in this chart, we're comparing the value of one US dollar against the equivalent amount of Russian rubles. So the upward trend in this chart indicates a weakening in the value of the ruble. The dollar has been getting proportionately stronger against the ruble over the course of the last 12 months. This time last year, one US dollar was trading for around 59 Russian rubles. Today, it's trading for more than 97 rubles, which reflects a fall in value of the Russian ruble of 62% in the last 12 months and 33% in the last 6 months. And if we change the scale of this chart to show what's been happening over the course of the last 5 years, you can see that the current exchange rate is the worst rate that the ruble has been trading at any point, excluding the exceptional fall in value that was seen in the 2 months following Russia's invasion of Ukraine. And if we expand the chart to show what's been happening over the last 10 years, you can see that today's rate is significantly worse than any point over that period. And finally, the chart for the last 25 years shows how significantly the Russian ruble has fallen in value over that period. Now, you may be sitting there thinking, does this really matter? Has Russia actually been doing that much trade with the United States over the course of the last 25 years? And the answer to that is that the exchange rate between the Russian ruble and the US dollar is actually very important to the Russian economy, because historically the main products that Russia has been trading in the international markets, being oil and natural gas, are benchmarked in US dollars. And despite President Putin's attempts to introduce the ruble as a benchmark for international trade, the vast majority of all deals that are still done globally are benchmarked in US dollars. So therefore, the exchange rate between the Russian ruble and the US dollar is important to Russia, and therefore the fact that the Russian ruble has fallen in value by more than 62% over the course of the last 12 months is going to hurt the Russian economy. This chart shows the movement in the exchange rate between the euro and the Russian ruble over the course of the last 12 months. This time last year, 1 euro was trading for around 60 Russian rubles. Today, it's trading for more than 106, which means that over the course of the last 12 months, the ruble has declined in value against the euro by 75%. And over the course of the last 6 months, we have seen a decline of 36%. And if you look at the shape of this chart, you can see that there has been a consistent decline in the value of the ruble over the course of the last year. And if we expand the scale of the chart out to show what's been happening over the last 5 years, you can see that the shape is very similar to what we looked at for the US dollar. The current exchange rate is the worst that the Russian ruble has traded at any point in the last 5 years, excluding the exceptional and short-lived fall in value that was seen following Russia's invasion of Ukraine. If we expand the chart out to show the 10-year position, you can see that the current rate is by far the worst that the Russian ruble has traded at. And the chart for the last 25 years shows the significant decline in the ruble. Now, the reason that the exchange rate between the Russian ruble and the euro is important to the Russian economy is that over the course of the last 10 years, Europe has been the single biggest market that Russia has been selling its fossil fuels into. Geographically, Russia is very close to Europe, and actually it built a variety of pipelines to deliver oil and natural gas directly to a lot of its customers. And because of the large amount of business that Russia was doing with Europe, a lot of the contracts that it agreed with European countries were actually benchmarked in euros. So the euro was the second most important currency for Russia historically. Now, unfortunately, from Russia's point of view, since the invasion of Ukraine, the vast majority of Europe, including all of the EU, have decided that they no longer want to buy any Russian fossil fuels. So the amount of trade that Russia is doing with Europe right now is at an all-time low. However, the exchange rate between the Russian ruble and the euro remains important to Russia because it's importing a lot of goods. As I mentioned, geographically, Russia is very close to Europe, and therefore it's importing a variety of different items. And all of those items are priced in euros, so when the value of the Russian ruble falls against the euro, those imports become proportionately more expensive. This chart shows the exchange rate between the Chinese yuan and the Russian ruble over the course of the last 12 months. This time 12 months ago, one Chinese yuan was trading for around 8.8 Russian rubles. Today it's trading for around 13.5 Russian rubles, which represents a fall in value of the Russian ruble of 53% over the last year and 28% over the course of the last 6 months. And if you look at the shape of this chart, once again, you can see that over the course of the last 12 months, there has been a consistent decline in the value of the ruble. And if we expand the chart out to show what's been happening over the last 5 years, you can see that the shape is very similar to what we saw for the euro and the US dollar. The current exchange rate is the lowest that the ruble has been trading against the Chinese yuan over the course of the last 5 years, excluding the exceptional period immediately following Russia's invasion of Ukraine. If we expand the position out to show what's been happening over the last 10 years, you can see that the current value of the ruble is the lowest for the last 10 years. And if we expand the chart out to the last 25 years, you can see the significant fall in the value of the Russian ruble over that period. And if you've been following the channel, you'll be fully aware that over the course of the last 18 months, Russia has made significant efforts to increase the value of its trade that it's doing with China. China is now Russia's single largest trading partner, both for the export of oil and natural gas, but also, importantly, for imports. And therefore, the value of the Russian ruble against the Chinese yuan is really important to the Russian economy because it's importing a vast array of goods from China. And as the value of the Russian ruble falls, that means that the cost of all of those imports is becoming proportionately more expensive. And of course, when you have an increase in the cost of your imports, that starts to drive up inflation. And I think one thing that's been really interesting over the course of the last 12 months is the benchmark currency for the trade that Russia is now doing with China. Immediately following Russia's invasion of Ukraine, President Putin went onto the front foot and made an announcement on live TV that all unfriendly nations, being the majority of Europe, would need to make all of their future payments in Russian rubles. And the reason that President Putin did that is that he wanted to establish the ruble as the new petrocurrency. Rather than benchmarking everything in US dollars, he wanted everything to be benchmarked in rubles. And that same principle applied to the trade that Russia was doing with China. However, there has been immediate pushback on that from China, and China has refused to do its contracts in rubles, but rather the contracts are now being agreed in Chinese yuan. And what that's done is driven up the demand for Chinese yuan and also the value. And what you can clearly see from these charts is that over the course of the last 12 months, the Chinese yuan has increased in value and the Russian ruble has fallen in value. So unfortunately for President Putin, nobody has agreed to his terms and conditions, nobody wants to pay in Russian rubles, and therefore the demand for Russian rubles has fallen significantly. This chart shows the movement in the value of the Indian rupee against the Russian ruble over the course of the last 12 months. And I think what's really interesting about this chart is that this time last year, the Russian ruble was actually stronger than the Indian rupee. 12 months ago, one Indian rupee was worth 0.75 Russian rubles. However, today, one Indian rupee is trading for around 1.17 Russian rubles. So that represents a fall in value of the Russian ruble of 58% over the last 12 months and 33% over the last 6 months. And if you look at the shape of this chart, you can see that there has been a consistent decline in the value of the Russian ruble against the Indian rupee. If we expand the chart out to show what's been happening over the last 5 years, once again you can see that the value of the Russian ruble is the worst that it's been, excluding the immediate fall in value following Russia's invasion of Ukraine. The value is the lowest that it's been at any point in the last 10 years, although it did come very close to the current exchange rate back in 2016. And the chart for the last 25 years shows the significant fall in the value of the Russian ruble against the Indian rupee over that period. And of course, the reason that the exchange rate between the Russian ruble and the Indian rupee is important is that Russia has significantly increased the volume of business that it's doing with India. There are a variety of factors that influence the exchange rate between two currencies. However, one of the biggest factors is trade. If a country is exporting lots of products, then generally speaking there will be demand for its currency, and so the value of that currency will rise. And as I'm sure you'll be aware, Russia is a net exporter. It has lots of valuable raw materials that the rest of the world want, such as oil, natural gas and wheat, and historically there was strong demand for Russia's goods. However, as you'll also be aware, as a result of Russia's invasion of Ukraine, a lot of countries that were previously buying Russian products decided that they no longer wanted to continue with that trading relationship, and sanctions were applied against the Russian economy. And the sanctions have therefore had a huge impact on both the demand for Russia's products and the value of the ruble. This chart shows the daily value of Russian fossil fuel exports dating back to the 1st of January 2022. Now, in terms of the colour coding on this chart, the blue section at the bottom represents the value of coal exports. The large purple section above that represents the value of crude oil, which is obviously the biggest single export that Russia has. The light brown section above that represents liquefied natural gas. There is a very thin blue line representing liquid petroleum gas. The lilac section above that represents refined oil products, and the orangey brown section at the top represents pipeline gas. So if we start off by looking at the situation in January 2022, which was prior to Russia's invasion of Ukraine, you can see that at that time Russia's total daily revenue from the sale of fossil fuels was around 775 million euros, which equates to around $850 million. Now, if you look at this chart, you can see that there are 3 vertical dotted lines, which mark significant milestones in terms of Russia's international trade. The first of these is marked on the 24th of February 2022, which was the day that Russia commenced its invasion of Ukraine. And interestingly, if you look at what happened to the total revenue for Russia, you can see that immediately following the invasion, there was a significant increase in the total daily revenue, which reached around 1.2 million euros or $1.3 million. And the main driver for that increase in total revenue for Russia was the significant increase in the price of natural gas. A lot of Europe was entirely dependent on those natural gas supplies for the production of electricity, and therefore a lot of countries had to keep buying Russian gas, and the cost of that gas increased by around 4 times. So this represented a huge increase in the total revenue that Russia was earning. However, since that point we have seen a consistent decline in Russia's total revenues as a result of the fact that most of the countries in Europe decided that they no longer wanted to keep buying all of these Russian fossil fuels, and so strong efforts were made to find alternative suppliers. However, as we've discussed many times on the channel before, it's difficult to be able to replace natural gas supplies because the only way of doing that is to buy liquefied natural gas, and in order to convert that liquid gas back into a gaseous form, you need a regasification facility. So it took a lot of the countries in Europe around 12 months to be able to find alternative suppliers. If we then look at the other 2 milestones that are recorded on this chart, The first of these was the 5th of December, which is when the European Union introduced an outright ban on the purchase of all seaborne transported crude oil from Russia. And then we have the 5th of February, which is when an outright ban was introduced on the purchase of all seaborne refined oil products for the European Union. And you can see that following the introduction of both of those bans, there has been a reduction in the total revenue that Russia is earning both from crude oil and also from refined oil products. And if we look at the situation right now, you can see that the total daily value of Russia's fossil fuel exports is around 500 million euros or around $550 million. Which means that compared to the level of trade that Russia was achieving back in January 2022, so before the war started, Russia has seen a fall in its daily revenue of around 35%. However, if we compare the level of trade that Russia is doing today with the spike that was seen immediately following the invasion of Ukraine, there has been a fall of around 60%. And the reason I'm showing these figures and going through it in some detail is that the demand for Russian fossil fuels has a direct link to the value of the Russian ruble. And the 60% fall that we've seen in the level of trade that Russia is doing with the rest of the world is almost the same as the fall in the value of the ruble that we've seen over the course of the last 12 months. Now, one of the reasons that the exchange rate for a country is important is that it usually has a correlation to the level of inflation in that country, because all countries have to import goods. And when the value of your currency starts to fall in the international markets, it makes all of those imports more expensive. If you're buying things that are priced in US dollars or euros or Chinese yuan, then the cost of any goods that you're buying that are priced in those currencies will increase when the value of your currency falls. As we discussed earlier in the video, the international benchmark currency for international products is the US dollar. So if two countries don't want to use their own currencies, things will be priced in US dollars. However, as we also discussed, countries like Russia and China are now trying to move away from using the US dollar and using their own currency. Now, prior to Russia's invasion of Ukraine, Russia's largest trading partner was Europe. However, over the course of the last 18 months, that situation has changed, and Russia's largest trading partner is now China. And Russia is now importing a massive amount of goods from China. Now, as we saw earlier in the video, over the course of the last 12 months, the value of the Russian ruble has fallen by 53% against the Chinese yuan, 75% against the euro, and also 62% against the US dollar. So what that tells us in terms of imports is that the cost of all of those imports has risen significantly for Russian consumers. So you would have expected inflation to have increased dramatically. However, this chart shows the official rate of inflation published by the Russian authorities over the last 12 months. So you can see that this time 12 months ago, the official rate of inflation was 14.3%. However, between August 2022 and April 2023, there was a consistent fall in the level of inflation. And in fact, in March and April, there was a dramatic fall from 11% in February to 3.5% in March and 2.5% in April, which was exactly the same time that the value of the Russian ruble was reducing significantly. Now, in May and June, there has been a very slight increase in the level of inflation, and it's now sitting at 3.2%. But when you compare that to the rest of the countries in the G20, Russia currently has one of the lowest levels of inflation. And this simply doesn't make any sense because, as we've discussed in this video, the value of the Russian ruble has tanked over the last 12 months, and therefore the cost of all of those imports should have risen significantly, and we should be seeing high levels of inflation. And the fact that we're not seeing high rates of inflation really does throw a question mark over the credibility of these figures. So what's the summary and conclusion today? Well, I wanted to post this video because the value of the Russian ruble is a really important topic. Ever since Russia invaded Ukraine, there has been a lot of debate in the press. A lot of people saying that the value of the currency has a direct link to the strength of the economy. And in the immediate aftermath of the invasion, when the Russian ruble did strengthen significantly, there was a lot of talk saying that this was because Russia had large quantities of fossil fuels and therefore may become one of the strongest economies in the world. However, what we've seen over the course of the last 12 months is a significant and consistent decline in the Russian ruble against all of the major currencies. The fall in value has not just been against the US dollar, it's been against the euro, the Chinese yuan, the Indian rupee, and a variety of other currencies. And I think the fall in value has been really interesting because there were two reasons for the immediate increase in the value of the ruble following the invasion. The first was the fact that the size of the value of the market for Russian rubles decreased significantly. Most countries in the world no longer were dealing with Russia, and therefore the market contracted overnight, and therefore made it much easier for the Russian central bank to step in and buy rubles in the international market to keep the value up. However, over the course of the last 12 months, what we've seen is that the Russian central bank no longer has the ability to do that because the economy has been posting large deficits and having to use its national wealth fund to fund those deficits. So money is being diverted to the economy rather than protecting the value of the ruble. And in addition to that, the increased levels of trade that are being done with China and India are not being done in Russian rubles. Neither of the Chinese or the Indian authorities want to do deals in rubles, but rather they've been agreeing contracts in their own currencies, which has led to a strengthening in the value of the yuan and the rupee and a fall in the value of the ruble. And the value of the ruble is now at its lowest level that it's ever been. This is getting to a crisis situation. And I think it'll be really interesting over the course of the next 3 to 6 months to see whether or not Russia tries to do something about this, whether it will step into the international markets and try to push the value of the ruble back up. And the notional level of $1 to 100 Russian rubles is very close to being breached. And it will be fascinating to see whether Russia tries to avoid that, or if Russia is in such a dire situation that it simply can't afford to do it. So the overall summary of today's video is that the Russian ruble has tanked in value over the course of the last 12 months against all of the major currencies. And if you see the strength of the currency being directly related to the strength of the economy, the dramatic fall in value indicates that the Russian economy is in severe difficulty. And if this trend continues, then we could see major problems occurring in Russia during the rest of 2023. And this could put a lot of pressure on the Russian national reserves, which are being eaten away at the moment by the huge deficits that Russia is posting. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.